Good morning, everybody. How are you all doing today? It's now Friday the 11th. It's about 2:25 p.m. here, Central Standard Time in Manitoba, Canada, and we're going to do a Bitcoin technical analysis. I've been updating a lot on Twitter, but I haven't really been updating on YouTube, and I should probably get into the habit of doing much longer technical analysis for you guys as well, okay? So let's get into this. So thank you very much for joining me. I hope everybody's had a wonderful holiday season thus far, and I hope that you guys have spent a lot of time with your family and your loved ones. Things on my end are especially going incredibly well. Can't complain. My girl is back here in the city, which makes me very happy. She was gone for about a week, but she's gonna be here for another month now. So anyways, let's get into this. So before we get into it, let's check out CoinMarketCap, okay? Check out CoinMarketCap and see where this baby is trending. So we're trending at the $125 billion market cap right now. Not too shabby. Let's go take a look at the historical data and see what kind of volume we've been looking at. So guys, we were in the 4Ks, right? We were in the 4Ks, and of course, 5Ks picked up a little bit. Then all of a sudden on January the 11th, which was yesterday, the volume ended up picking up substantially because we ended up downtrending very heavy. But now we're starting to stabilize. And every time the volume drops from almost 7 billion to, for example, 5.4 billion, two questions are asked, okay? One question is going to be, why is the volume not picking up, right? Which implies, are the bulls able to defend, right? That's kind of a big question. And another question is the sell-off done? Because the bears now cannot apply any more pressure with volume to the downside. So it can be, both of them can make sense, right? They can absolutely make sense, and it just depends on how you interpret it. So let's talk about Bitcoin and why it broke down, okay? And what I always recommend to people is draw trend lines, guys. Trend lines are very vital when it comes to seeing breaks, right? So let's see what the time frame is very relevant in my opinion, okay? I think it is more like a 2-hour chart. Yeah, kind of like a 2-hour chart was pretty relevant to me. And the 1-hour chart, and like anywhere between the 1 hour to the 2-hour chart, okay? So this trend line has been established since the 28th, right? And I've been talking about it for a while as well now. That's a 13-day trend line, or about 2 weeks we can say, right? And have you guys noticed that the moment that, of course, every time this point was established, this point there, and after these ones were established, right, people started drawing the trend line. They're like, okay, I'm just gonna extend it outwards, and then every time we hit it, right? And people ended up going long, right? I'm sure some people tried to go long there, but the moment that a trend line like that ends up breaking down, you guys gotta take your loss, man. Because once a major trend line is broken, it now becomes a major resistance. And when it does become a major resistance, not really that great of a chance after capitulation like this happened for us to even get back there to test it, in my opinion. Not anytime soon, at least, okay? So always make sure that when you guys are in these types of situations and we end up getting a clear conviction with a break to the downside where it's guaranteed, make sure you guys understand that there's not, you gotta take your stop, you gotta eat up that loss. Click that X button, close your eyes, you know, and just take that loss, guys, because if you're unable to protect and preserve your capital, how the heck can you grow it, right? So another thing I can always recommend to people is don't try to catch a falling knife, okay, guys? Like right now, I'm doing incredibly well, and I'm catching the falling knife, but I'm experienced in the market, and I can kind of do that sometimes. That's why for the month, I'm up a fairly decent amount already. If you guys have been following me on Twitter, I literally have been maintaining my 100% win streak right here, okay? And for the month, I'm up about 7,000 Canadian dollars already, which is incredible for about 5 days of trading with very little hands-on time, right? So what I recommend to people when I say don't catch the falling knife, because it's more so for experienced traders, is that you don't want to go long by trying to catch it and ladder on the way down, right? You don't want to do that, guys. What I always recommend to people to do is wait for it to form a higher high, right? A higher high, and then a higher low as well. And then, you know, and after these things are confirmed, you guys can buy it on the breakout above here when it goes something like that, right? So that's something that I always recommend doing. You buy it on this point right there, that point right there upon breakout, because it just seems to make a lot more sense. You know, sometimes if I'm getting a long wick, Like if I get a long wick to the downside on this particular wave, right, on this structure right there, you guys know what I'm talking about? Like a big green candle, that's like a hammer, that's like a doji with a lot of volume, right? That might be indicative for me to buy on a golden ratio, right? Something like that, or somewhere laddering it on the way down successfully from 382 to even there, you never know, right? I'll add 25% to my position, and I'll add even more to my position upon the breakout. So I just want to give you guys a clear-cut idea of how I view the market and what I generally recommend. I don't ever give, real financial advice. It's not my goal for my YouTube and technical analysis videos. My goal is to educate through personal experience. And laddering, as it goes down and down and down and down without any clear signs of actual bounces yet, it's more so for the experienced traders that can gauge price action at level 2 and especially read RSI on multiple time frames. But if you're unable to do that yet, guys, don't get greedy. The few percentage gains that you get that are more as you're laddering down, it does not outweigh your safety. And the safety of waiting for a long wick down, a higher high, a higher low, and buying on breakout, that's, in my opinion, a lot better, okay? So let's go over this Elliott wave count and see what we can deduce from here. Now, Elliott wave is my absolute favorite method of technical analysis, as you guys know, and I absolutely adore any Elliott wave analysts out there, okay? And then we see a clear cut. It's too small to do it on this time frame, to be quite honest, and I don't want to get that low, right? But the way that I'm seeing this is 1, 2, 3, 4, and 5 going to the upside, and then we get a 1, 2, 3, 4, and 5 right there. So the way that I'm also seeing this, okay, is one of two ways, which I'm going to go over it with you as well very briefly, right? I see this as a possible A, B, and a C. Very, very simple. It's so hard to argue with this logic as well, right? With the way that it's actually forming, right? This could be 1 right there. If you guys break it down for some more, you can easily see it. Oops, I'm sorry, I did that completely wrong. 1, 2, 3, 4, and 5 right there. And this makes the A, B, C in here, right? Take a look really closely. You guys see the A, B, C going to the upside right here as well, right? A, B, and C. And then here you're seeing 5 waves with a truncated C as well, right? You're seeing 1, 2, 3, 4, and 5, right? Super weird where you go 1, 2, 3, 4, 5. The third wave is very tight in there as well. So that's the ABC in my opinion, okay? And the reason why I say that is because, well, take a look, guys. We're getting into the right around the golden ratio range. That's where a lot of people ended up going long, and I nailed that call, right? And then now we're trying to make clear impulse waves going upwards, but we failed. Now it is time to review WXYs, okay? Now we get 5 clear waves going upwards. We get a WXY is referred to an Elliott wave double combo structure with a 7 correction wave, okay? So now you get a wave that tries to break out for an impulse, but it fails. And because it fails, it ends up making another ABC type of correction, which is now a 7 wave structure. So count with me, 1, 2, 3, 4, 5, 6, and 7, right? And then now the way we denote this is W is where the structure began, right? Where the first ABC ended. X, always think of it as failure, right? Where X, no pass. And then the Y is right down here where it completes a double Elliott wave structure. So between the X and the Y is where you're going to get an additional ABC. Now, if we look at this, right? If I actually deduce this right here as ABC, right? Just something like that in there. Well, this one just keeps trying, okay? It just keeps trying so hard to make these impulse wave failures. And in my opinion, it actually successfully creates the first wave. 1, 2, 3, 4, and 5, right? It successfully creates it. And I believe it even made the third wave as well. Or the second wave, 1, 2, 3 coming down, right? And this one here just kept trying and trying. This one was actually successful as well for the first subwave going upwards, where that makes 1, 2, right? But this third wave is where it failed. It's trying to go 1, 2, 3, 4, and 5 right there, right? But this one right there, bam, That is the one where it fails right here, in my opinion, right? This structure there, because we ended up double topping on the fourth wave, and as the fourth to the fifth wave right there. So what it was trying to do was 1, 2, right? And it was trying to go 1, right? And then 2, and then 1, 2, 3, 4, 5, and then it's trying to make another 4 to come down, and then 1, 2, 3, 4, 5. So it was trying to make something like that up there, right? But it just simply failed. And the moment that we know it failed is very simple, is because of the break right there, okay? Because this is now a retracement of more than 100%, okay? Not only that, right? It's also retracing lower than the wave 1 territory. This right here was the wave 1 territory break to the downside. Because what should happen in Elliott wave is that wave 3 should never retrace into the wave 1 territory, and I'll show you guys what I mean. I'm seeing this as 1, 2, I see this as 3. Now, if we got a third like that and we bounced off of, you know, roughly around this region, right? And then we went up, bam, that would have been perfect. And then it would have made a fourth wave coming downwards, right? And then we would have got another 5 waves going upwards. And then overall, you know, when we get another, say, 5 waves, just as an example, to 5K. And then the way that this structure would have looked is like this, okay? And then this would have looked like 1. Let's make this super thick so you guys see. 1, 2, 3, 4, and 5. And the way that this would have been denoted would have been like this, okay? 1, 2, 3, 4, and 5. And now you got yourself an official Elliott wave structure. Make sense? That's how it would have been, okay? Do you guys see what I'm talking about? 1, 2, 3, 4, and 5. But because we failed this wave 1 territory region, bam, it completely wipes it off of the table, and this is now no longer an Elliott wave structure. I know that Elliott wave can be confusing a lot of the times. It's super confusing to myself, but the way that I do it is a method of deduction that seems to make sense by just kind of trial and error and seeing which path is making a little bit more sense, right? Hey darling, you almost ready to go? Yeah, can you give me 10 minutes and I'll be done my video? Yeah. Okay, guys. Let's do this. Yeah, I don't got a lot of time, guys. I don't wanna do a lot of trading. I'm being very honest. Okay, guys, I don't want to do a lot of trading whatsoever. And I'm not trading a lot. Like, I can trade up to, you know, 45K or something. So I'm waiting for the right play, because with a high probability play, you can add more size to your position that yields high probability with a big success rate, right? So right now, as it stands, I'm not even going to be trading or anything for a while until I see the right play coming upwards, right? So yeah, so now that I see this as a failed Elliott wave structure, I can't help but think to myself that we're going to get another ABC. And I see this coming up right here already as very complicated waves, I have to admit, right? I'm not really sure what this specific structure is, but if I were to count it from this right here, 1, 2, 3, 4, and 5, like this could very well be it. But I need a little bit more time. I just want to catch you guys up very briefly with my opinion. But I can't help but think that this is kind of a bearish flag right now as well. But another reason why I think we might get some rally and we're done there, okay? Okay, so think of it like this. If this were somehow the failed wave that started where this is 1, 2, 3, 4, and 5, then we're going to get ourselves our ABC structure going to the upside, right? The counter wave. Now, where would this counter wave get up to? In my opinion, right around this range. This is a cluster of resistance, and also to the point where it's a 382 Fibonacci region. So the people that are in a short position right now, if it does get to here, I think that they're gonna most likely add to their short position already if they haven't, right? And then we could possibly get one more wave simply coming down. And right now, where we are trending is right at roughly the golden ratio region. We haven't broken it on this exchange yet, but on some exchanges we've actually broken it already, right? So who knows where this is gonna end up getting to, guys. In my opinion, we're gonna most likely see a small relief rally to counter against the trend, right? That's how I'm seeing it right now, but it's not gonna be a big one, guys. Like right now we are fairly bearish, and we still cannot get above any type of bullish levels, even on the 5-hour chart, right? On the 4-hour chart, we tried so hard as well to break above the 200 moving average, and we just cannot sustain above it. On the 3-hour chart, we try to break above it as well. We just cannot sustain above it, guys. It's really rough. It's the 5-hour chart right now. That's tough, right? We just can't stay above it as well. We've been under the 5-hour chart since October as well. And we tried to get above it here, but we're just breaking down right now. So let's see if we're gonna hold, guys. Like I'm waiting for one more small drop right here between 36, like anywhere between 35.50, which is this region right here that I'm seeing as a support. If it hits this region, 35.50 to 36.25-ish, I'm gonna try to go long on it because I believe the ABC is very much so due. And then I'm going to take a Fibonacci retracement level of the entire first wave coming down. And then I'm going to short it anywhere between the 382 to even the 6.5 level, depending where it is. So what I think makes a good trader is someone who is reactive in the market combined with a little bit of predictability. If you are only predicting in the market, I think that's a bad way to not be able to react to changing market conditions as they develop, right? And if that happens, you're going to be setting your ways and you're going to be very biased. And I think that the best traders are completely unbiased and they don't care whether the market goes up or down because there's money to be made as a bull or a bear. That's why I highly emphasize my skills. For example, I know that one of my strengths is becoming a very reactive trader as things happen. Sometimes I don't care about RSI. Sometimes I don't care about Elliot waves. Sometimes I don't care about a lot of things. It just depends on finding the key set of ingredients that's going to make a successful trade. So to summarize this video, I do see an ABC going to the upside that makes the B wave, right? I'm talking about this right here, right? I'm talking about this structure right there, somewhere there that's going to start it. It could be at this range over here where it gets to 35.50 first, right? Down over there, and then we break up. But either way, I think it's long overdue, especially with a drop of this type of caliber right now, that we are going to get some sort of relief rally at these types of RSI levels. And after that, guys, I expect another huge wave down. I don't think that this correction is quite done yet. If we can't even break above a 5-hour level on the RSI, or sorry, the 200 EMA level, yeah, don't count on too much right now, guys. Not only that, some people would interpret this as a bear flag that's going to be breaking to the downside. So we got to really let this level off. On the 30-minute chart, we're very, very much so neutral according to Constance Brown's RSI rule between 40 to 60. On the 90-minute chart, we're fairly bullish in my opinion, but I don't think that's going to be a really big histogram tick up. Yeah, so I'll keep you guys updated later. I'm waiting for the next big play, guys, for the next big swing position because, yeah, I don't have time right now for day trading. And I'm starting to become a much better swing trader, in my opinion. Learning a lot as I go. Obviously, I specialize in scalping, which requires a lot of time on the computer usually and monitoring. But, yeah, I don't want to be... Hey, Sarah, so wave to the camera. You guys barely see her, but she's back there somewhere. Okay, so we got to head out, guys. I'm gonna spend time with my girl. She's my priority, guys. I don't give a crap about you guys when she's here. I'm sorry. So have yourselves a great day. Good luck. I hope you guys are sticking to your stop losses. And if you guys are still holding, best advice I can give to you guys if you're a day trader and you're panicking is designate a new stop loss. So take care, baby whales. And just so you guys know, if you guys are still interested in my course, sign up for it. A lot of people are still incredibly interested in it, so I'm just going to keep that sale going till January. It's going to be $300 for both courses, or basically $150 for each course. So let me know, guys. And if you guys have bought course 1 already for, you know, the full price, get back to me, guys. I'm gonna give it to you guys. If you guys have paid, you know, the $200 for it, I'm gonna try to help you guys out as best as I can, because I want all of you guys to know what I know, get inside of my head, and understand why I'm on a 100% win streak this year. That's 7,000 Canadian dollars, averaging about $800 a day, which is pretty good in my opinion. Because in this type of bearish market, if I'm able to pull off, you know, still making an average of 200-300K a year right now, wait till you guys see me in the bullish market, man. So have yourselves a great day and take care. Bye now.